Hello, this is the Chart Profit video. Friday 26th of January, about 3 hours into the session. We've seen lots of aggressive buying, this green at top here marked on the Emini S&P profile. In fact, we've seen no significant selling marked for 24 days. The buying has been effective. Market's been moving higher, especially when this significant buying is present. We've seen intraday selling witnessed by the negative price and tick number here and here, but this intraday selling has been ineffective. We've seen value areas either higher or overlapping, and with consolidation we've seen minor controlling prices moving higher. For instance, recently, as I said pre-open on Thursday, enough time was spent at 28.39 that the minor 18-day point of control migrated to that level, saying that price relative to this level is worth monitoring for intraday strength and weakness. Here's the level on the half-hour chart, and since that migration, that minor migration of that level, we've seen prices above it, controlling prices moving higher, and then subsequent price action above that level is usually a bullish indication. We've seen a new high today on the Emini. You can see that price action again here on the spider chart on the daily. On the bigger time frame with a 4-month, moved up to 267.18, and then we saw the spider heading higher subsequent to that. Again, new high today. Small caps lagging a little here. The Russell 2000 ETF IWM not much higher this week. In Europe, the FTSE 100 UK FTSE 100 index broke out recently, printed a new high. Last couple of weeks we've seen the index lower, largely due to the pound, which has accelerated higher in that time period. Higher low on this daily chart above the half range off the Brexit high over here. Pound has been strong against most major currencies, but a lot of this is the dollar, which has fallen again this week rather sharply below the major here at 95.50. All of this price action, as I said at the time, in a weak location. We were looking for price back above this level for strength. It never happened. Obviously we've reached the new low here. There's support off the 2008 low, big support here at 87.25. That's the half range. If we reach that, look for support. If we break that and print time below that level, puts the dollar again in a really weaker location. Euro strong against the pound this week again. Higher low on the daily chart here at the 1 year support at 117.55, and really strongly higher from there. And the dollar yen, we've called this a key chart recently, two clear levels. We've got the major up here at 113.70, and recently we had two attempts there which failed at that major resistance. We were kind of in no man's land here, and I said the breakout either above that level or below the 2 year controlling price here would be price action that would likely indicate the next directional move. We just had 2 or 3 days here, a little time below that 2 year, but we couldn't get above it, and we're now heading lower. So the dollar remains weak in all these charts. Gold has benefited. The GLD, the gold ETF, described last week the price action with regard to the major controlling price at 120.90. It just fell a little down to 117 with this price action, and then back up on this day here to 120.90, and we've accelerated higher, and possibly the high 2016 high may be tested if the dollar keeps falling. If cash gold here breaks above its equivalent level from 2016, be lots of media attention. Should that occur here, that would be considered a major breakout for the chartists. We'll see lots of comments on that. Here's the weekly price up here, would be a 4-year high. This is TLT, the T-bond ETF, major down here at 119. 15 month migrated up to 126.66 recently, and at the moment, interesting price holding the natural support here, the half range around 123 from the low over here to the subsequent high, and so this is the natural support. Price below 123, a couple of bars here would indicate a retest of 119. If you're bullish on T-bonds, you want to see that level hold. Let's look at the sentiment indicators, which we know and most of them been peaking recently. This is my version of the Ridex assets ratio. Reached its highest level back here in December, above 22. Just yesterday heading back in that direction, so we watched this level. 3 weeks ago, the public poll from AAII peaked. The bulls percentage lower this week, but 3 weeks ago, bulls percentage reached 59.8%. That was a 7-year high. Bears percent fell to 15.6 3 weeks ago. That was a 3-year low. And the net, the bulls minus the bears, 3 weeks ago reached 44.2, which was the highest since April 2004. Looking here at the investors' intelligence, 1 week ago, bulls percent reached a multi-decade high of 66.7%. At the same time, the bears percent fell to 12.7% 1 week ago. That's the lowest I have in the database, and as I said again, probably the lowest since the 80s. So newsletter writers incredibly bullish. We had a big inflow of $23.4 billion reported by Lipper US fund flows this week. That net inflow including ETF inflows. We lost a big number 4 weeks ago, so the 4-week flow number is roughly the same at 36.1 billion, and that has recently kind of caught up. It's shot up from a negative 33 billion just 5 weeks ago, which was the lowest since February 2008, and we said at the time that that put this indicator at odds with other recent sentiment readings. But now this sentiment indicator peaking as well. But if we look at price action, particularly here in the profile, I see no indication of weakness yet, even on this time frame. Okay, that concludes the video, and I thank you for watching.